This week, we have two triggers that could send stocks crashing lower. Now, trigger number one that traders are going to be focused on this week is going to be the FOMC meeting. And there's going to be a lot of eyes on paying attention to what the 10-year yield is doing. Now, on Wednesday will be the day that the FOMC statement is released, but we also are going to get the FOMC economic projections. Then Jay Powell will be taking the podium at 2:30, and we're going to see, is Powell about to pour cold water on this hot stock market rally, or is he about to pour gasoline on it? Now, we come over and look at the SPY real quick. Notice on Friday, the SPY closing with a doji candle. We look at the SPX, which is the cash markets. This looks more like a spinning top type of candle. Wick on the bottom, wick on the top. And then as we come over and we start looking at the weekly charts, notice the MACD indicator still has a good separation of the two lines. We close in the upper third of the range with a very small wick on the top of that candle. Even the SPY, very small wick on top of that candle on the weekly chart. But things start to break down a little bit. You see on Friday, we were able to make a new all-time high, but does this candle look like a bullish closing candle? Absolutely not. Look how small the body is, and more importantly, look at where the body is in relations of the overall range of the candle. Not looking too sharp out there. However, when we go back and look at the economic calendar for this week and we try to figure out what is going to be the second trigger, we all know everybody's paying attention to the FOMC. Well, on Sunday, we see nothing. On Monday, we had the Empire State Manufacturing. That's not it. Tuesday, it has to be on Tuesday, right? Well, not quite. We have core retail sales coming out. Then on Wednesday, we have the FOMC. Then on Thursday, we're going to get another reading of the unemployment numbers. And I want to remind you guys, look at the numbers from this past week. You can see we actually had 263 new filings. And just to put this on a graph real quick, just to kind of show you guys, notice this was one of the highest readings that we've seen going all the way back to June of 2023. So this is a little bit concerning, seeing the unemployment numbers starting to rise. And it's not just the weekly numbers. When we look at the last non-farm employment numbers, notice this past reading, we only created 22,000 new jobs and they were forecasting 75,000. However, if we look at even before that, the reading in August 1st, look how horrible that was. They were forecasting 106,000 jobs and we only created 70,000 new jobs. So when Jay Powell takes the podium out here on Wednesday, what do you think he's going to be talking about at the press conference? He's going to most likely be talking about a weakening of the labor market. Now, that's not the other trigger that I was talking about, but that is something we most certainly need to consider. If the labor market starts to weaken, aka we'll end up in a recession, and where's the disposable income people are going to need to continue to push company earnings up higher? Let me know your thoughts in the comment section down below. Now, before we look at the second trigger, I want you guys to pay attention out here on Friday and just look at the Dow, Nasdaq, S&P 500, and Russell. Now, the Nasdaq was the strongest. Look at where it opened versus where it closed. But look at the Dow. Dow was very weak out here on Friday, down 273 points. The S&P was up, and then at the end of the day, started to sell off. It was down $3.18. Then we look at advancing issues versus declining on Friday. We had 66.2% of issues declining on the day. When we come over and look at the sectors, notice we had a majority of sectors in the red on Friday. But then we look at the 1 week performance. 1 week performance actually looks a lot better than what we saw on Friday. For the 1 week performance, we only had two sectors in the red: consumer defensives and healthcare. The big leader out there was technology. And this past week, there were some big movers out there. For instance, Oracle, a monster move on the way up, but notice, is it able to hold on to that massive gap? Well, you can see we've almost come down to 38% of the gap. If you just take Fibonacci retracement and measure the entire gap, you can see we're almost at the 38% retracement. Now, will Oracle continue to go all the way down and fill the gap? Well, we also want to keep an eye on NVIDIA. What's NVIDIA doing? Well, NVIDIA had a gap up after the Oracle news, just kind of hesitating. We start seeing NVIDIA and some of the other big tech stocks out there starting to take on heat. Watch out, things are going to get ugly. For instance, I want you guys to pay attention. Look at this chart real quick. If we look at a chart, and I'm going to put this on the 5-minute chart. Here's a chart of the SPY. The SPY on Friday was down 22 cents or down 0.03. But then if we come over and look at the equal weight S&P 500, notice it also closed a little bit lower at the end of the day. But look in relations, it was actually down 0.72%. Drastically different. You can see that the RSP actually gap lower, popped up, filled the gap, and just continued to meander lower the remainder of the day. Now, when we come over and look at the fear and greed index, you can actually see we're sitting at 54 on the edge between neutral and actually greed. Then we come over and look at the most recent investor sentiment survey this week. What do we see? We have a reading of 28. The prior bullish reading was 32. So we're starting to see the bulls drop off, and look at the bears. They went from 43.4 last week, gaining all the way up to 49.5. And this is coming out one of the most bearish periods of time for the market. If we come over and look at this stat real quick, and what this stat goes on to show is, if we look at from August 15th to September 15th, I want you guys to pay attention. On the left, when that period has been negative 1%, we have only been up the last half of September 4 times and down 13 times. When the trailing is between -1 to positive 2%, well, guess what? We've only been up 7 times, down 10. When we've been up more than 2%, it's just barely over 50%, where we've been up 9 times and down 8. In the current period that we are in, we've actually been up 2.09. So even though we've been in a more bullish period of time between August 15th and September 15th, it's still looking problematic that we could see a pullback in the market at any moment. Now, if we come over and look at the 10-year yield versus the 2-year, we want to pay close attention. When this starts to steepen, the stocks usually will come under pressure. We see it on Friday starting to hook up here just a bit. And then a chart that's even more obvious, we look at the Dow Jones chart on the top. Bottom chart would be the transportation index. And notice, even though the Dow was able to come all the way back up this week, make a new all-time high, look at the transportation index. It cannot even break above a recent swing high. So that is another warning sign out here for stocks. And that's still not the second trigger that I'm talking about. Now we want to come over and look at the SPY versus HYG, high yield bonds. What do we got going on over here? High yield bonds. Well, we've seen the S&P make a new all-time high this week. Did the high yield bonds make a new all-time high? Absolutely not. But this chart on the bottom, the high yield bonds, does look a lot more constructive than what I just showed you guys a few moments ago when we looked over at the transportation index. Now, I want to let you guys know right now, Apex 7 a massive 80% sale off all their evaluation accounts, passing as low as 1 day. Take advantage of this offer. Use the link in the description box down below. Use promo code Mike at checkout. So now let's come over and look at the second trigger out here this week. And that is going to be right here, this part of this statement, triple witching day, which is going to come on Friday. Now, if you don't know what triple witching is, it's when stock index futures expire, stock index options expire, and equity options also expiring. So watch out for some quick, fast moves out there on Friday, and then a whole lot of nothing going on. However, something that could transpire after the FOMC comes out could be the day right before triple witching. Quite often we'll get a lot of movement, and the day after the Fed. So I actually think Thursday has the opportunity to be a big day in the stock market. Now, with the SPY actually closing with that doji-ish looking candle, almost a shooting star type of candle, notice where the anchored VWAPs are, and they're not really that far away. If you notice from all-time high to the first anchored VWAP, just shy of 2%. The secondary VWAP would be down here about 2.68%. Now, at some point, do not be surprised if we get a 6, 7, 8, even 10% correction. On the SPY, a 5% correction would bring us right down here near the lowest recent swing point back here in early August. Now, when we zoom this out here a little bit, let's just play devil's advocate. Where would a 10% correction actually take the SPY? That would take it right near this high volume node right over here, somewhere right around the 590 price point. Now, when we start looking at the 4-hour chart, look at that last 4-hour candle that we had on Friday. Not looking all that bullish. We have the wick on the top as we push to a new all-time high. MACD indicator, however, doesn't look all that weak just yet. But then we start looking at the volume profiles and look at the 30-minute chart out here on Friday. Friday, kind of a D as in dog shape profile, but look at where we closed in relations to the range. One, yes, we had a tight range, but then the fact that we closed in the lower portion of the range and the MACD indicator does have a bearish alignment could set the stage that we are likely going to pull back, potentially fill in the gap that was left behind from Thursday all the way down here at 652.24. Now, when we start looking at the futures markets, notice, I want you guys to pay very close attention. We look at the volume profile off the weekly. That's going to be this histogram that you see right here. Well, notice we have value area high right here at 66.05. Whenever we close outside of value, I expect the next 1 to 2 sessions, we're going to come back and at minimum test out this area. Well, since this volume profile, one session would equal 1 week in time, that means either this week or next week, highly probable, we'll hit 6605. And there's a couple areas within this profile that I really like for potential targets. We have one, this minus development area. And let me go ahead and shade this out for us real quick. That's going to be anywhere from the ballpark of 6624 down here to about 6617. Below that, then value area high. But then we have another kind of minus development area down here as well that I definitely would want to pay attention to off this weekly profile. That'll be anywhere from 6573 up here to 6585. We'll be tracking this during the live streams. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. This week on stream, we're going to be giving away more prop firm accounts like Take Profit Trader and Apex accounts. Now, normally the rule behind this is anytime we're above value area high, anticipate higher prices. The path to least resistance would be higher. Notice last week, once we broke above value area high, we pretty much stayed above it. We broke above all-time highs and we just kept marching on up. Now, as we come over and look at the daily profiles off the 30-minute chart, and I do want to caution you guys real quick. When I'm talking about the futures markets, I have already rolled over the contract. So I will be trading the December contract come the open on Sunday night. But notice we have a D as in dog shape profile that was basically formed out here on Friday, which indicates that Monday is likely going to be a breakout or breakdown from this pattern. On Thursday, we had a P as in Paul shape profile. And the rule behind that would have been if we broke value low, we were likely going to explore the lower third in the range, and we never made it down there. Also, a key level that I'm watching would be this point and control down here that has not been tested at 65, 62 and a quarter. Then we have one a little bit lower down here at 65.03. Now, if we were to go ahead and measure right up here from all-time highs down to some of these pointed controls, and we just look, the first pointed control would only be a 1.5% drop. Down here to the secondary pointed control, you're looking at roughly a 2.4% drop, and that is nothing if this market's going to keep going on up. Now, one of the things we also have to watch out for with the D-shaped profile could be that the first wave we break could end up being nothing more than a trap. So on Sunday night, if we start selling off hard, watch out. Could it be a trap for a move back up? And if we break up higher, be on high alert. The first way we break, just be on high alert. Could it be a real move? Yes. I want to approach it with caution. And what I mean by that is if we break down, here's where we know we're wrong. If we start getting back above value low, we know we're wrong, and we're looking for higher prices from that point on. Now, when we look at the volume profile levels I'll be dealing with on Sunday night, value area high will come in at 66.51 and a quarter. The point of control will be about 66.44 and a quarter, with value area low being 66.42.75. So we're right here, right near the point of control, and that's not far from value area low. Now, if you are an aggressive trader, here's another approach that you can use. On Sunday night or Monday, if we start breaking below the low on Friday, then what we want to do is draw a horizontal line right across that low. If then we start coming back up above it, we can then look to replay value area low for a target, point of control from a target, value area high, and then from that point on, we'll probably be making a run to new all-time highs. Now, as we come over and look at the Nasdaq real quick, the QQQs on the weekly chart, MACD indicator still looks strong on the weekly chart. You can see we closed near the upper end of the range, very small wick on the bottom of the candle, very small wick on the top of the candle. Now, if we do start to pull back, one of the areas I want to watch is going to be within this minus development area of the profile at about 544.35, which is also very close to a prior all-time high in this market. Now, as we start filtering down to the daily chart, notice on the daily candle, wick on the bottom, wick on the top, and you can see we're starting to get stretched away from these anchored VWAPs. We do have a high volume node. If we start to pull back early in the week, I would want to watch 580.15 would be a point of interest. Now, one of the ways that we could play this is draw a horizontal line right across where the prior all-time high was, which comes in right here at a price point of 583.32. If we get back below that level, then I'd want to start to target that high volume node, and we can also pull some Fibonacci retracements. Swing low right up here to the swing high, and if we start breaking that high volume node, 38% retracement would come into play, followed by the 50%, and maybe even down here towards the 61.8 Fibonacci level. Now, the MACD on the daily chart, we do have a bullish cross, but notice as we're making new all-time highs, is the MACD indicator taking out any of these prior peaks in the MACD indicator, any of these prior MACD peaks? Absolutely not, at least not at this moment. Now, when we start looking at the 4-hour chart, notice right here, kind of a shooting star type of candle we formed on Friday, but I got to caution you, the MACD indicator on the 4-hour chart at this moment still looks extremely strong. Then we start diving down to the 30-minute chart. Look what we have right down here at the bottom. MACD indicator on Friday started to cross back down towards the end of the day. Now, as I look at this profile, notice we're closing right near the point of control. So do maybe on Monday, doing maybe push on up, make a new all-time high, and then potentially come back down. Keep in mind, we still have a gap up from Thursday, which we have not come back and filled yet, which would be down here about 580.70. Now, could the market continue to go higher? Yes. Are the bulls in control? Yes. And if we look out here on the daily chart, look at the last time we seen a candle even break the prior candle's low. That wouldn't be until this candle right here, basically on September 2nd. From that point on, every single candle has failed to even intraday break the prior candle's low. So at some point that will change. So that's 1, 2, 3, 4, 5, 6, 7, 8 consecutive candles that have failed to break the prior candle's low, even if it was on an intraday basis. Now, when we come over, look at the Nasdaq futures real quick. We look at that last 4-hour candle we had. We have a nice spinning top type of candle. Wick on the top, wick on the bottom, very small body. But as we draw our attention over here to the weekly profiles, look how thin this structure is. And more importantly, this area right here, anywhere from about 24,317 down here to 24,283.75. To me, that is a logical point that we are highly probable going to come back and test this week. And that would also correlate with that prior breakout point that brought us to new all-time highs. However, we also were able to close above value area high at 24,182, which whenever we close outside of value, we expect the next 1 to 2 sessions, we'll come back and visit that. Since we're dealing with a weekly profile, one session would be 1 week in time, either this coming up week or the next week. Highly probable we come back and test that level. We start breaking below that. Then we target the point of control, 24,073, and then down here towards value area low at 23,996. Now, one thing to note, we have an untested point of control that was left behind from the first week of September. Now, this is going to be a second week, and whenever we get stacked consecutive untested point of controls, highly probable we come back down and test out this level. Now, as we go over look at the daily profile real quick, I want to draw your attention right over towards this area right here, kind of a minus development area, anywhere from about 24,298.5 down here to 24,291.5. This has a very high probability target of coming back and getting tested Sunday or Monday. Now, when we look at the volume profile, if we start breaking above value area high, which will come in at 24,395.5, then the market turns back down. Then I'd want to target the point of control. Then I'd want to target the minus development area. Then I'd want to target value area low, and then even the lows out here from Friday. Anything below that price point, however, I would want to refer back over to the 4-hour chart and start focusing on some of these other additional levels. We have a secondary minus development area about 24,228, and then we have value area high, the point of control, and then we'll see, do we get a completely weekly volume profile rotation on the way down? Now, if you guys trade with prop firms and you want to learn how you can trade copy on TradingView, then you want to make sure to check out this next video right here.